Welcome to In the Money, sponsored by Flyer Financial Technologies, the company that builds cutting-edge technology designed to solve asset and wealth management firms' toughest trading workflows. In this podcast, we help advisors and asset managers understand how technology is transforming the wealth tech sector. We'll cover how to leverage technology for faster, smarter investment decisions, megatrends, and more. Now, on to the show.
Welcome to In the Money. I'm your host, Rusty Sommer, and I'm fortunate enough to be joined today by my friend Bill McFadden from GreenHill Investment Reporting. If you don't know Flyer FT, we power the fintech you love and use every day. So, welcome. Hello.
Yeah, thank you for having me.
You're welcome. You're welcome. It's good to see you. So, I think for today, we're obviously going to focus on what you guys do, but in the world of wealth management, clear and insightful reporting is more than just numbers. It's the foundation of client trust and informed decision-making. So today, Bill's going to be here and talk a little bit about how GreenHill investment reporting fits into that equation. Bill, just so you know, is the president and CEO of GreenHill and also serves on the board of the Association of Trust Organizations. And he's an all-around good egg. So
that was a special request to put that one in, Rusty.
It was, but you are a good egg, and it's always good to have you here. So why don't we start with this? I think that there's an evolving landscape around reporting. And historically, reporting is been a method of communication. I think that somewhat that maybe has transitioned a little bit to being an artifact in some cases for regulatory purposes or for, just to show that you did the work. But it's still really valuable, and clients derive a lot of information out of it. But also, your advisor or your IAR or whoever it is you're working with, it's necessary for them to understand and communicate with you and also to make decisions possibly that they have to make internally. So let's start with this. So let's talk about how expectations are changing of clients and the need for more sophisticated reporting.
Yeah. So I always viewed reporting, and regardless of the line of work that you're in, whether you're offering some kind of a SMA or UMA offering and you're sitting down with clients, if you're got a financial planning tool or CRM tool, the output is incredibly important because it does drive dialogue. And it drives dialogue, and what it does, it uncovers unknown issues or unknown needs. And performance is a great tool to be able to sit down with clients and run through the numbers. And the numbers are sometimes positive. The numbers are sometimes negative, as we all know. Unfortunately, we cannot change that at GreenHill. They are what they are. But clients and advisors in that dialogue, they may reflect upon their own strategy and what their needs are and what their risks are that they're willing to take. And that's what that report output drives, typically, those conversations.
Okay. And I think we both agree that technology is transforming the way RAs, do a lot of things. But certainly one of those is generating and delivering those reports. And I think that your partnership with Invent probably reflects some of that viewpoint.
It certainly does. What we're finding is that advisors and advisory practices, they want the flexibility to dive deeper into any given solution or offering they have. And the partnership with Invent allows us to dive extremely deep into the area of investment performance measurement and attribution and customize around those unique needs. Whether you're an independent broker-dealer, you're a registered investment advisory firm, you're a family office, it's that level of flexibility and customization that is really needed.
How would you describe the importance of data visualization and clear communication within reports, both from a perspective of working with your end client, but also in the decision-making and analysis process, maybe before you even meet with them?
Yeah. So our advisors, they like to bring just a couple of reports when it comes to investment performance measurement. When I say a couple of reports, they can get a lot out of just 2 pages.
Yeah.
And so we'll position charts and graphs that are meaningful to that advisor. And let's face it, everybody runs their business differently.
Yeah.
And even advisors within their own practice are communicating with their end investors uniquely and separately. So we don't have just a package set. We have a default template set.
Okay.
That template set can then be customized by the advisors to reflect how they engage in communication with clients.
Yeah. And there are differences, I think, depending on what firm you're at, right? And what that reporting looks like and feels like is really reflective of maybe what your value proposition is, how you're engaging with clients, what you're delivering to them. So certainly there's some variation. And if you're an enterprise RIA, you're a broker dealer, you have to really think about that evaluation when you're talking about maybe working with a new vendor, or even when you're working with your existing vendor. Like, what do I want to deliver, and how does that align with my message and my value prop with my clients?
We have a tagline at GreenHill. We like to make performance personal.
There you go.
And by making it personal, you are meeting the needs of clients in a way that is so much more meaningful and valuable to that relationship, because you can present the information in a way that helps those advisors tell their investment story. And so that's what we are about. We're about making it performance personal, but also facilitating the role of the advisor in helping them tell their story and how their clients are performing relative to their needs and in alignment with the objectives they've laid out.
Gotcha. Prepping for you sitting down, I went and kind of scanned through some of your blog posts recently, and I noticed one that really it hit on private equity. And I think that, performance reporting is necessary and it's important, but then you start throwing in some things like private equity, and you can drive insight more so than you could with maybe just some traditional investments. What would you have to say about, the value of going beyond standard performance metrics and exploring, those deeper insights?
There's always some scary asset class buckets that us technology firms were always afraid to touch, and we knew there'd be issues with it. Fixed income had always been one of those in the past. And now you've got these separate specialty asset classes and crypto and you name it. But when it comes to anything that would be considered that we may put into that bucket of a specialty asset, in other words, hard to value type assets or limited valuation opportunities of those assets, so much of that lies within the connectivity and the underlying platforms where we can receive information. And if we can't receive it from those underlying platforms, then our clients will actually push data to us, or we can pull data from our clients. Nowadays, it's not like it used to be. Data is so accessible, especially with APIs and other means. You should be able to get data as quickly as it's available to be received or presented. And we go out of our way to ensure that we've got all the right connections in place for reliable, secure, consistent, meaningful data.
Yeah,
that's a big part of what we do. So anything that falls into, again, a hard to value asset or a specialty asset, anything, it's important to get that data as quickly as we can so we can present information back. And, with performance, it's not just data in, data out. A lot of it, it's just, we wish it were.
Yeah, right.
And it's just a lot of it is discussion with our clients, our partners, because it's not always perfect.
It's an art and a science.
Absolutely is a blend of art and science.
So within your purview is the assistance in kind of creating a storyteller, and you're giving people tools to help uncover hidden trends that they can then use to tell compelling stories. How do you see the best people or firms approach that?
You always have a couple of different components to this business, right? You've got the prudent investor component. You've got the fiduciary component. You have governance components. And it's important for us, and we take this very seriously, to be able to get information and push data out to clients as quickly as we can. So we can make them aware of issues before they arise. That's where GreenHill provides tremendous value. That to me is something that we're going to see that trend continue and grow, sort of like the old trust accounting world where you had operations in-house and you see more and more of that outsourced. We are outsourcing in a way that is meaningful data pushed to fiduciaries, pushed to prudent investors, pushed to compliance officers, so they're aware of those before things should happen that would give them great concern.
So everybody in our world is trying to grow their business. And I think every tool has a kind of spot in delivering that value proposition. We're a portfolio management and trading tool. And so we know where we fit in that. What's the role of reporting and demonstrating value in building client relationships?
So in addition to the just leveraging it as a communication tool, obviously it's also leveraged, and we mentioned that earlier, that it's from a regulatory perspective, right? You're checking some boxes from time to time. But that, to me, it's not just a communication tool. It is a platform that allows the relationship between advisor and investor to grow and blossom. But in order for that to happen, that report output needs to be reliable.
Yeah.
It needs to be accurate. And what I have found in the last 4.5 years at GreenHill is that not all partners offer that. And we go above and beyond to ensure that our data is accurate and reliable, because advisors don't want to spend time reassessing data.
Right.
They need to go out and meet with their clients and also meet with prospective clients. They need to know they can print a report and walk out the door 2 minutes later.
Yeah, no, I agree with that. And I think that with advances in technology, just all around us, right, there is an expectation that we're meeting people where they are. Mm-hmm. And they want to see things in a certain manner or way. How important is the idea of customization in reporting?
There's a tagline I always use. I learned it from a professor of mine many years ago at Drexel. And he talked about pull requirements versus push requirements. Okay. And pull requirements, you're always listening to you have 3 sources or personas in which you're listening and gathering information. You have your clients, you have prospective clients, and you have your partners. And all of them should be feeding the needs that they have or pain points. You can take those needs and pain points and immediately transition them to opportunities.
Right.
And especially in the area of reporting, because their needs change, the needs of their investors change. And we're they talked about it earlier today at Market Council Summit, we're in this transition of wealth right now. And the transition of that wealth isn't going to anybody below or above the age of 70. It's going generally below the age of 70.
Right.
They have different views and perspectives.
Yeah.
And so you have to just keep listening all the time and adapt.
Yeah. What would you say maybe the top 3 benefits of flexible reporting solutions that adapt to those evolving needs would be?
So I think the primary benefit is client retention, right? Advisor client retention. I think that's certainly a top benefit. I think the second one is probably just consistency, right? You're within an organization, and the organization has their vision for their growth and their vision for how they engage with their own clients. And so you can adapt to that vision and have sort of a content package that is reflective of that. And I think the last piece is just always it ends up in something around governance or compliance. And that's really important. Now, do advisors really spend a lot of time concerning themselves with that?
Right.
They prefer not to.
Sure.
But they have to.
Yeah. No, I agree. The performance reporting process historically has been a very time-consuming, labor-intensive process. Let's not talk about conversions and all the work that goes.
Please don't make me talk about conversions.
But, organizations typically have entire teams dedicated to this, or at least historically have. Mm-hmm. How is technology, or how can technology streamline that process?
There is phenomenal technology out there today that enables firms like ours to consume data and map workflows of data that up until 5 years ago really never existed.
Wow.
It's incredible, Rusty, that what they have out there right now, it's a matter of picking and choosing what is best for you and best for your own business model. But they are there, and we've leveraged them, and we've partnered with one in the last year and a half or so that is helping us and our team get to the point where the data that's good data, for lack of, that's my layman's term for, incredibly unstructured data, but data that may be good or bad data, you could focus on the bad data and the unstructured data versus focusing on the ones that are just going to pass through automatically. it has played a tremendous role. It allows us to pay attention to the issues and to take those issues and raise awareness of them versus having to spend too much time just number crunching.
Yeah, I think being able to elevate those items sooner in the process really is one of the reasons probably why you can get things done a little bit faster, because I don't know, I remember when I worked on some performance projects, it might take you 2 weeks to figure out what might be a problem. Then you got to dig in and, you got an Excel spreadsheet, and do the math, and like, it's just, it was always kind of hard. So how do you balance automation with personalized service?
We're very lucky at GreenHill. We have our team that handles our servicing and operations. And I say servicing operations is really important to us because we want those who are handling the data to be the same personnel who actually service the clients.
Right.
So what we joke around internally, we know our clients' data better than they do. And that, knowing the data, having our experience, knowing all of the various, and you've worked on them, the books and records platforms, as well as the custodial platforms, they're all unique and special and different in their own little way.
Right.
And they all have some pros and cons. But if you understand how they operate, you can actually tweak data, knowing what your clients prefer and expect in advance.
Right. Right. Yeah, that's pretty cool. And I think there is a lot of innovation, even in what could be, or some people might consider, like one of the boring corners of the investment management industry, right? And performance reporting, some people would say that would be the case.
Mm-hmm. Yeah.
Give me some insights on what you feel like is the future of reporting in wealth management.
I think we're going to find, like so many others, right? The future reporting is going to be, first of all, there's going to be digital reporting everywhere.
Yeah.
I mean, digital reporting, in my view, is going to take over these paper report outputs for sure. Yeah, it's just a matter of time. But I think the reporting is going to be structured in a way that's so much more meaningful and constructive for a dialogue. Okay. It's going to really tap into what is of the greatest interest or concern or opportunities for an end investor to have in terms of conversing with their advisor and leaning on them for their expertise. Yeah. That's where we're going to see a huge lift.
Okay. Interesting. What do you think the role of AI and machine learning is going to be on generating those insights and maybe automating some of the tasks?
Well, you must have heard my conversation earlier. We're
possible.
We are. There are plenty of opportunities for AI in this space, and some have concerns that AI is going to take over the role of an advisor. Something that'll never happen, never ever happen. It's just going to complement what we're doing already. I think AI is going to provide some added insights, of course, to patterns in data, and raising awareness of patterns in data well before an advisor knows, or the firm they work with knows, or an end investor knows. And I think that's how we're going to be able to leverage AI going forward.
Okay. All right. Interesting. I talked to somebody else earlier today about that. And it is fascinating to see how quickly things are changing. And the power of computing is making it possible to consume so much data and drive such sophisticated calculations that it can go out and search for these things for you.
And you can train it to find what it needs to find.
Right.
That is absolutely incredible. You can literally take a chat GPT and you can create your own GreenHill investment performance encapsulated knowledge base. Wow. And then when clients want to tap in and say, what happened with this number? I cannot believe I did so much better than that. This can't be right.
That's right.
And if they want to pick up the phone call, great. But if they want a map of what transpired and when, and the impact it had to how they may be managing the money for that account, then it's right there at their fingertips.
That's interesting.
It's self-service. It's empowerment. I love empowering our customers.
Right.
And they want to be empowered. They want to have access to that. And AI is going to give them those tools they never had before.
Yeah. So, how would you say GreenHill is staying ahead of the curve in meeting the evolving needs of the wealth management space? So you think trust offices, you think RIAs, the different types of firms you're working with.
And they're all different.
Yeah.
And how they run their business is entirely different. I think it just goes back to what I mentioned earlier, sort of pull versus push requirements. Mm-hmm. And if you're not constantly asking the questions, What pressures do they feel? What regulatory pressures do they feel? What are they anticipating? How are they working with other partners? What are some of the things that they need from them? We can adapt if you're asking the questions and you continue to learn and understand from them. We can adapt much faster and sort of stay ahead and present meaningful output and meaningful content in the different channels that we serve.
Right.
Talking to one of our customers that has a donor advised fund platform, a nonprofit organization, is a completely different conversation than talking with someone who is a $10 billion trust department.
Sure. So GreenHill has recently had, I think, what would, for me, is a very interesting partnership with Drexel. Tell us about that.
So I'm a proud Drexel alumnus, and I had an idea a few years ago after acquiring GreenHill. Why can't we make conferences more enjoyable? And so I tapped into the college I was in within Drexel University. It was the College of Information Studies at the time. Now it's the College of Computing and Informatics.
Yes.
They have something called a senior project where all the students in the College of Computing and Informatics work on a project that's sponsored by someone like us at GreenHill.
Okay.
And they have essentially taken what we've done, they've gamified our performance solution.
Oh.
And we just unveiled it last year at the Association of Trust Organizations annual meeting. And we also did it at Pole Consulting. And it's just a game. It's essentially a stock picking game to see who can perform the best.
Okay.
But it's only during that conference period. Could be 1 day or 2 days.
Right.
And the students are now coming up with other games just to make it fun. And we have sponsors that actually hand out prizes. There are other sponsors in the conference room, just like you and I have here today.
Yeah.
And then we also make donations to a nonprofit organization.
Okay.
Like the Foundation for Financial Planning. Right. The last one we did was for the Trust Education Foundation. And so the sponsors, they get an opportunity to engage with attendees. Yeah. It creates a little bit of a buzz.
Sure.
I didn't want it to be a distraction from the agenda, but I did find out that we had a couple players monitoring their results throughout the day. So as the market was changing, they were monitoring their standings, and it's great for the kids. And I say the kids because to us they are kids now.
Right.
To the kids, they can apply all of their learnings from their 4 years at Drexel and use and apply those into their 5th year, and actually do some things that we otherwise wouldn't have considered. They want to add in some layer of security because they have a focus on cybersecurity. Have at it.
Right.
It just gives them that great opportunity. Plus, they can learn about the business that we serve.
It is a great way to give back, and it's a brilliant idea. I love being able to pull in, people from kind of the next generation who are going to be in our business and giving them some exposure. Mm-hmm. This is what goes on. These are the things we work on. These are the things that are important to our clients. This is how we deliver on our promises. Mm-hmm. And what do you think? Right. And they bring something new and exciting, and
they have no fear.
That's pretty neat.
They have no fear. They have a ton of initiative and ambition. We are not their employer. We're their sponsor. Right. And they just are, they have there's almost no guardrails. So if they want to do some things differently, they want to use different software, they want to use a different construct, they want to use a different environment. It's all cloud native. And it's all state of the art stuff.
Yeah.
They're really talented kids, and I'm really proud of them.
All right. Well, that's awesome. Thinking about what's next. 2025 is right around the corner.
Mm-hmm.
Put on your little predictor hat, and what do you think the big thing for 2025 will be?
Oh, in all the markets that we serve here? Mm-hmm. Well, I think, unfortunately, you're still going to see a lot of focus on cybersecurity. It's just not going to come to an end. Now, I think having cloud native solutions is fantastic because you've got security kind of built in with those, but it's really everything outside of those. I think you see cybersecurity continue to be an issue. I think you're going to find that everyone here at Market Council Summit that's sponsoring the summit is going to hear now for the umpteenth time about how advisors need to be more efficient.
Sure.
And so they're going to do everything in their power to ensure that advisors can get out the door and meet with clients, have meaningful dialogue, present results, plan for their future in a much more intimate way than really has ever been had before, because they're going to have the time for that.
Yeah. Yeah. And I think that's totally true. If you look back, particularly when I started in the business and I was an advisor for a while, the max number of client accounts you typically could manage at a time, 250, 275, maybe if you were really good. 225 is probably where a lot of people landed. And now with advances in technology, I wouldn't be surprised that it might double, right? You might be able to manage 500 or 600, right? The number gets bigger because, as you're saying, they just need to be able to get out the door. It's our job to make that process invisible.
And right now, if they want to hit the print button or if they want to schedule a meeting and work with their clients digitally, that's why it's so important for us at GreenHill to ensure they have that reliable, accurate data. More so than ever before, they need to get out the door and meet with people.
They really do. They really do.
And on the golf course is fine too.
It is fine.
I'm waiting for my advisor to invite me.
Aren't we both? And I don't know if that's an indication of where I am on my advisor's list of important things and not important things, but I'm going to say probably so. Well, Bill, this has been a lot of fun. I do appreciate you stopping by. Thanks for joining today's episode of In the Money. I'm your host, Rusty Sommer. I'm fortunate enough to have been joined today by my good friend, Bill McFadden of GreenHill Investment Reporting. If you don't know Flyer FT, we power the fintech you love and use every day. Thanks again, Bill.
Thank you, Rusty.
You're welcome.
Thank you for listening to In the Money, the show that delivers advisors, asset managers, broker-dealers, and other technology service providers the knowledge they need to navigate this industry. Don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Flyer Financial Technologies. The content has been made available for informational and educational purposes only.